Well, joining us for our weekly strategy session today is Chris Hart. He's investment strategist over at Investment Solutions, and we're talking investment strategy. Chris, I think top of mind for most investors at this point must be what's happening in the Middle East, how that's going to play out, what it could do for energy prices going forward, because we have oil still sitting at $115 a barrel and nobody knowing which way is going next.
No, exactly. Obviously, if the problems still cascade, if it hits Saudi Arabia out, would dread to think of what the oil price can actually do, but it is a risk event. And what I think, from an investment strategy point of view, it's actually quite interesting to see how pervasive the view is that the rand is going to, that the next step is the rand's going to weaken. And it's quite stunning of how strong the rand has actually been since this Middle East crisis has actually, erupted to the surface. And my suspicion is that we cannot just rely on a story that the rand strength is finished. And that's quite critical from an investment point of view, because that tells us whether inflation is going to remain subdued. If the rand stays strong, inflation will be subdued. Interest rates will be hiked much later. If the rand gets very, very strong, I'm not even sure if further interest rate cut can't come back to the debate. But we need to appreciate that the overwhelming liquidity that's been created with quantitative easing and interest rates at zero, I think is creating a pressure for risk. In other words, the Middle East is really creating a pause in a rising momentum in the risk trade again, where investors are looking for risk assets. And so I think across the emerging market world, it's not just South Africa, but emerging markets and other risk assets like equity and property are starting to find favour as it becomes apparent that the US is going to keep interest rates at these levels for a lot longer. The Europeans are making noise about rising interest rates, and we can see that effect on the exchange rate already. And so it's going to be an interesting year. A weaker dollar, even without the Middle East crisis, would suggest also high oil prices. So you've got the Middle East crisis and a weaker dollar there. From an investment point of view, however, the oil price is interesting, because a rising oil price, as long as it's rising, at a reasonably pedestrian pace, reflects the strength of the global economy. It's actually not too bad. So you'll find that equity prices were moving up along with the oil price until it suddenly started to shoot up and go above $105, $110 a barrel, and then suddenly you start to see this, should we take money out? In other words, you start generating a perception that high growth or the sentiment, higher oil prices is going to dampen global growth. I think at this stage it's only sentiment. Global growth can take $110, $115 a barrel. Once you start going 125, 130, then you start to damage. You start to get actual damage.
If you strip the Middle East out of the equation, where do you think the oil price should be, given the global growth prospects at this stage?
I would think about between $90 and $95 a barrel. In other words, that's where the base level is.
And where would you see the rand going from these levels? Currently around R6.90. It was down at 6.85 yesterday,
Yes.
and so it looked like the momentum was to the downside. How much stronger could it get?
Well, it depends on the inflows, and it really is also a factor of time. If these inflows carry on, for the rest of the year, for instance, it's quite possible that the rand gets below 650 even, and the stock market starts to challenge the 40,000 level, right? And that's basically the function. If the rand continues to strengthen, the stock market will probably continue moving up because of the inflow of investment that's taking place. I think the rand weakness that we saw through January and most of February was quite possibly a function that with the relaxation of exchange controls, asset managers moving quite a bit of money offshore was a factor that actually got it to the 730, 740 level just 2-3 weeks ago. But since that seems to be fizzling out, the rand strength is coming straight back. Should asset managers have done that? Absolutely, because the relative expensiveness of our market reflects that there's more opportunities offshore, but the rand's going to negatively affect offshore performance still.
Well, we're about halfway through the earnings season here in South Africa. Given what you've seen coming out of companies here, and I think it's brought the PE of the market down from above 17 down to around 14, 15.
Exactly.
Given how our market's looking at the moment, and given the scenario you've just painted with the Rand stock market going forward, where would you be putting any new money at this stage?
Well, I think equities is the place to be. All right. Firstly, the earnings season's coming through. It's not disappointing. So what was priced in is there. Obviously, good news was priced in. So we need more good news. Where will that good news come from? I think partly the economy may well exceed expectations on the upside in terms of overall performance, because your cyclical factors, your employment cycle, your credit cycle, as I say, your previous interview with motor vehicles, for instance, all of these not synchronized last year, so you had a bit of an iffy recovery, but now they're starting to synchronize, and I think we'll get that, that synchronization will help to mutually reinforce the upward growth cycle this year, and for that reason, earnings could still come through. So even though retailers are looking, expensive, good earnings again this year might help to support them. All right, to what extent? One's obviously got to be careful. We saw, these themes end up burning your fingers anyway, like we saw with construction, etc. Wonderful, while the party is lasting, just leave the last dance for somebody else, as it were.
Well, given the outlook for the oil price, the resources super cycle, do you think the resources sector still offers the best value in the South African market?
Well, without a doubt, if you're going to see strong inflows of foreign money into our market, they're going to be focusing on the resources sector, because effectively it's your growth trade with emphasis on commodities.
What happens in June when quantitative easing runs its course, that's QE2 runs its course? Do you think we'll have a QE3? Do you think if QE2 ends, who's going to replace the National Treasury and buying all of those US bonds?
The QE2 has effectively monetized the entire US deficit at this stage, and by the looks of things, there isn't exactly a huge queue of investors to take up that. Firstly, it's the quantity, right, and then it's also the rate at which you're getting. The bonds are facing a headwind because the whole global inflation cycle has turned, and they are expensive. That was attracting the capital up until about the middle of last year, third quarter. Now you're seeing quite a big rotation out of bonds and into equities. So funding those bonds, you're going to get headwinds. And the irony is QE3 is just going to perpetuate this. And that means that the US could be trapped a little bit from a policy perspective to get out. They may well have to bring QE3 back to the table if we start to see bond yields. And remember, the QE2 was put there to subdue bond yields, and they've actually gone up quite a bit. Since since it was put on the table. What happens if US 10-year yields go up with the moribund property market that they've got, looking like a second dip, the double dip, in fact very strongly, it's the double dip in the property market, the collateral backing up their financial system. My gosh, if yields suddenly go to 4.5%, 5%, without another round of quantitative easing, they may have to, their hand may well be forced.